All right, going live. Welcome, everybody. Thanks for joining. Give it just another couple minutes here for folks to enter in, and we'll try to make a prompt start right here at noon Puerto Rico time. Welcome, welcome. I was just saying we're going to give folks a couple minutes to enter here. I know we're like 2 minutes early or so, and we'll make a prompt start at noon. Pues bienvenidos, bienvenidas. Gracias por venir. Voy a empezar en unos 2 minutos para darles a las otras personas hasta mediodía para entrar y vamos a proceder desde ahí. But thank you guys for being here. Nice to see some familiar faces there in the attendees. And by faces, I mean names. I can't see anybody's face yet. Just another minute or so, and we'll get started. And for everybody that's joined us, you'll have access to a recording afterwards too. So I'll make a prompt start, and anybody that joins late, well, they can check it out on the recording. So, but cool. My clock says it's noon, so I'm going to jump in. Thank you very much for everybody that's joined. This presentation is about basically a discussion of the types of loan programs that are offered in Puerto Rico. Pues claramente soy bilingüe y como la mayoría de ustedes me imagino, pero esta presentación será en inglés, pero la pantalla en español. So just saying that I'm gonna present in English. Any questions, if you want to pose any questions in the chat, please, you're very welcome. I'm going to speak in English, but any questions, languages are just Spanish and English for me, but your questions can be in either one, of course, and I'll do my very best. So the slides are going to be in Spanish, so hopefully that's all right with everybody. So let's hop in here. First, to kind of address the elephant in the room, I did grow a mustache for November, but anyway, that was just like a Movember thing to raise awareness for prostate cancer. So if you have a prostate, go get it checked. You don't want to find out too late that you have an issue with it, right? So, but anyway, so that's why you're seeing the new version. But today's the last day of it, so enjoy. All right. Thank you all for coming very much. I really appreciate seeing a lot of familiar names here in the group. My name is Nate Stewart. I'm a mortgage broker with Collab Lending. I'm based in Puerto Rico, but our company does business in lots of other states. Today's presentation is going to be exclusively about the loan programs that are on offer here on the island. Sometimes I go by the moniker Gringo Criollo. I am a huge fan of Latin culture from lots of different places. I lived for 8 years in Colombia. That's where I learned most of my Spanish, and then moved over to Puerto Rico a little over a year and a half ago, and have been loving living on the island. It was the best decision ever. My wife and her whole family are from here, so that's a little about me. But at Collab Lending, our main focusing goal, and this is if you're a borrower, this is if you're an agent, this is if you are a real estate professional in any other field. Our specialty, we try to provide the very best customer service. That's our big goal of ours. And so we also try to emphasize creative solutions, listening in detail to what borrowers are trying to achieve and what agents are looking for as well, and try to have creative solutions for those things. And we also celebrate diversity on our staff, the types of clients that we work with. So we're happy to have all comers. All right, I'm going to run a little analogy here. So I'm going to start just with a conventional program. We'll run through like the basics. If you're an agent, this might be helpful because good opportunity to kind of brush up on just like real basic things. So you'll see this running analogy of the ice cream. So if mortgages are to ice cream, well then conventional is going to be your vanilla type loans, right? So what goes in? Who can qualify for a conventional type loan? Basically, FICO down to 600. Obviously, the rate. If you have if you have a FICO score of higher than 740, right, then you're in the best category. You can have it 800, 850, 8,000, whatever. Higher than 740 is going to get you the best access to interest rates. Every increment of 20 points you go lower than that, it's going to drop off incrementally as you go down from 740. Every increment of 20 points, it goes down. The conventional loan maximum was $647,200, and it just got increased to $726,200. So that's now anything above that obviously would be jumbo, but that's how high we can go now. And a lot of lenders are already rolling it out before January. We can potentially do $726,200 as the max loan. If someone is looking for a conventional loan for their primary home, they can do it depending on credit, but they can do it with 5% down. If it's a second home, usually have to be at least 15% down. Better rates if you can do 20 or 25% down. And then for investment properties, minimum 20% down, and better rates too if you can put 25% down, right? You can't do a conventional loan in an LLC. This is a very common question. But if someone is looking for, like for example, if you're an agent and you have a client, they want to purchase an investment property and they want to purchase it in an LLC, well, that's fine. We have products for them, but it cannot be done in an LLC and still be a conventional loan. And basically conventional, like the vanilla type loans, they're ideal for people that have good savings, good credit, decent credit, let's say, and stable income, right? Salaried income, they work a full-time job for the last couple of years. Those kinds of things they're going to be ideal clients. So hopefully you find that helpful. All right, continuing with our ice cream analogy here. So FHA, obviously these are loans that are backed, and essentially a portion of the loan is guaranteed by the Federal Housing Administration. They go down, they can deal with lower credit scores, but these loan programs are not exclusive for folks with less than ideal credit. It can be for anybody. You can have, you can qualify for an FHA loan with great credit. So there's not like a credit maximum, which is sometimes confusing for folks. But basically, if you have a FICO down to 500, honestly, I've not seen anybody with a FICO of 500 get a loan. But apparently, with some extenuating circumstances, could be possible. But we do see, if somebody has a FICO of 580, you can go all the way down to 3.5% of a down payment. So that's a very attractive thing, because remember, with conventional, minimum down payment is 5%. With FHA, it's going to be 3.5%. So that's attractive for a lot of folks. The interest rate is typically a little bit lower than what you'd see in a conventional loan, anywhere from could be a whole point, but it's typically a fraction of a whole point less. It's also going to have mortgage insurance essentially for the life of the loan. So even after the borrower has 20% equity, so let's say that they come in and they don't want the 3.5% down, they have a bunch of cash and they want to put 20% down right away. Their interest rate will be a little bit lower, but that might not translate to a lower monthly payment for them. And it's because they'll still have to pay mortgage insurance. And so we would want to do a comparison and see if they're putting they're comfortable putting down a lot of money. We would want to compare and see if conventional is going to be a good option in terms of their monthly payment being lower, or even with a lower rate, but they still have to pay mortgage insurance, maybe FHA could be better. So that's a comparison to consider. FHA has they have more strict types of appraisals. So if you are looking around in Puerto Rico and you find a place and you think it'd be a beautiful fixer-upper, and you want to go, and it's going to be your primary home, you want to go 3.5% down. Well, that might not be the best program, because if it's a fixer-upper, it might not pass an FHA inspection, because things like chipped paint, loose handrails, missing safety features on electrical outlets and stuff like that, that can be enough to pause the whole process, to have somebody come out and fix it before you can reinitiate it and start heading back towards closing. So that's something to keep in mind. FHA is not usually ideal for fixer-upper type properties. Also, the loan limits, last I checked, which, like I mentioned, the conventional line just went up. FHA may be going up, but last I checked, depends on the number of units. Here you can see on the screen. So for a single unit property, it's around a little over 420,000, and then it scales up with a maximum loan limit for 4 units being $809,150. So it depends on the number of units. A very common practice for folks is to purchase a multi-unit up to 4. 4 is the max you can do, right? Can't do 5 with FHA. So that would be right out, but up to 4 units. Sometimes folks will, purchase the multi-unit property. They'll live in one of the units, because if it's FHA, one of the units has to be your primary residence. And then what they'll do is, living in one, they'll rent out the other 3, which is a very popular strategy that folks like to use, to essentially get their mortgage payment covered or mostly covered, hopefully, by those other units. It's important to keep in mind that it does have to pass that test, where the rental income for all of the units, for the 3 units, if we're talking about a 4 unit, the rental income of the additional units has to be sufficient to cover the full mortgage. So that's a self-sufficiency test that properties would need to be able to pass. And typically that information, like how much will it rent for, that would come from the appraisal process, right? So an appraiser would give that opinion of value, and that's typically what we go with. Yeah, that's like what I was saying here, and talking about the self-sufficiency test. So, and this is an important detail. The monthly payment for the mortgage has to be less than 75% of the rental income of all of the units in the property. So that's the calculation there. So if you have a client, or if you're looking to be a borrower yourself, when you're shopping for properties, that's an important thing to keep in mind. Is if they want to go FHA, 1, they have to live in it. 2, it can't really be a fixer-upper, and 3, it's going to have to pass that self-sufficiency test, is what it's called. All right. By the way, I'll pause here for a moment to say, any questions as we're going here, please drop them in the comments or the Q&A section. Happy to answer any questions en español o en inglés. Y debo mencionar otra vez que soy bilingüe, pero claramente la presentación mía, yo estoy hablando en inglés, pero la pantalla en español. So let me know any questions that you guys might have, right? Final thing here about FHA, one really, really great resource is this link down here at the bottom, if you can see it. FHA, so we know that financing condos, getting mortgages for condos in Puerto Rico can be extra challenging, right? So, that's probably one of the biggest areas that we see significant differences in helping people get loans, is if they want to purchase a condo. And the main reason is because in order to purchase a condo with financing, the condo has to be what's called warrantable. And there's a whole long history of why that's the case. But in Puerto Rico, not every condominium, complex meets those warrantability requirements. And so we're, at CoLab, it's a routine thing. We reach out very often to condo association managers to try to work on figuring that out. There's a questionnaire that they have to complete. And we find that, a lot of condos are warrantable, but if you want to purchase a condo with an FHA loan, it has to be already approved and on this list that you can see here. There's a link, and if anybody is interested, I'm happy to send you the link if you're looking for it. But be careful though, if you just Google FHA condos Puerto Rico, there's different lists out there. This is the official one, as far as I know. So do check that out. But that list you can search through. And so if you're an agent and you have a client looking to use an FHA loan to purchase a condo, the ones on the list, you can sort it by municipio, by municipality. You can sort it, I believe, by different regions and things like that. So very useful tool if someone's looking to purchase a condo with an FHA loan. Because if it's not on that list, they're not buying it with an FHA loan, unfortunately. But there's still other options that we have, so we could still help out with other programs. Okay, moving on to VA home loans. This is we do lots of these. We love to help veterans, because obviously in Puerto Rico, we have lots of service men and women. And so this is people that are either retired and they're veterans, or folks that are active duty, they get stationed here. This is a very, very, very common product that we do. And we love the VA home loan benefit. It's really, really a very solid program. Check it out. I found a picture of camo ice cream. So anyway, keeping the analogy going. But basically, so what are the basics of the VA loan? So the main thing that we'll do at CoLab, we do it like automatically. When somebody says they want to know if they qualify for a VA home loan benefit, we have to see if they have a certificate of eligibility. If they don't have a certificate of eligibility that says they're eligible for this benefit, it doesn't matter how long they say that they were a service member or any of those details. They have to have been honorably discharged. There's several criteria, but we can do this for you. All we need is their name, their birthday, and their social, and we can generate that report and make sure that they are eligible. Also, I want to note, if they have another VA home loan, like let's say that they were stationed in Hawaii, and then they get new orders, and while they were there in Hawaii, they bought a house with a VA home loan benefit, but now they're getting stationed in Puerto Rico and they want to use another home loan benefit. Again, they can do it. So don't believe, if there's a common myth out there that you can only use it one time. That's not the case. Or you can only have one at a time. Also not true under certain circumstances. It has to be somebody's primary residence, right? And they have to have sufficient eligibility. So, and that's all math that we're happy, and I'm happy to work with folks to figure out if they have eligibility, if so, how much is left, and can they use it moving forward. So VA, a couple other things about it that are really important to know if you're an agent or if you are looking to borrow using this program, is that it has to be your primary home. Cannot purchase a rental property or an investment property with the VA home loan benefit. You can purchase multi-unit properties. So long as you're going to live in one, you can use the VA home loan program to purchase, but cannot be just a pure investment type property. You can go down to, they go all the way to 100% financing. So there can be potentially, there could be zero money down, very, very attractive there. And there's a funding fee. So the VA has a funding fee. However, many veterans and service members, they can be exempt from that. And so we can track that information down to see if a service member is exempt from that funding fee, which is usually just if they're using it a second time, they'll see a funding fee potentially. So the VA home loan benefit also has the same maximum loan limit as does conventional. So at the moment, now coming into 2023, that's going to be $726,200 is going to be the new loan limit for VA. There it is. And you can go over the max limit, except in order to do so, the borrower would need to bring, first of all, they're going to have the profile to support a monthly payment that high, so their income and all that good stuff. But if they want to go over this new max loan limit, they have to be able to bring 1/4 of that difference in cash. So let's say that they want to purchase a place and they're asking, let's just make it easy, $12,000 over the max loan limit. That's fine, we can do that. And they're going to need to bring $3,000. Math in public is fun. They're going to need to bring $3,000 as a quarter of the difference in the price. Okay, so if that sounds like too much, don't worry. Send them to me, and I'll be happy to have the conversation and do the math for you. And another nice resource here on the screen, and also happy to send it to anybody that might want it. This is the link for if someone wants to purchase a condo in Puerto Rico using the VA home loan benefit, because similar to the FHA, VA has a pre-approved list of condos that they're willing to guarantee the loans for. And so if it's on that list, you can use the VA home loan benefit to purchase it. If it's not, there is a way to like apply and ask, could this please be added and analyzed? However, not exactly sure how quick of a process that's going to be. So it's going to depend on the timeline for the client or the borrower there. But really solid resource. You can hop in there if you're an agent and you know somebody's looking for a condo and that they're wanting to use their home loan benefit, or if you're a borrower and looking to purchase yourself, you can. Everybody has access to it. But that's the official link. Be careful. There's some other like copy type links that may not be as accurate. Okay, sticking with the analogy here, USDA. This will be a brief slide, but this is an awesome program that really doesn't get used as much as maybe it should. It's available in Puerto Rico. However, you see a map down here where the darker yellow areas is where you cannot use the USDA loan program, because it's specifically, this program is to stimulate the growth of rural communities, right? And so the USDA guarantees loans in areas where it's based on population density. So the more rural the area, the more likely it is that you'll be able to use this kind of a loan. And so you can see if it's darker yellow, like here we see the metro area of San Juan, Arecibo, Rincon, Mayagüez, Ponce. Those are areas where you're not going to be able to use the USDA loan. But and there's a link where here's the link. At this link you can actually go in and manipulate the map and zoom in, because obviously you might have a property that's really close. And so on that map it'll tell you pretty clearly if it qualifies or if it doesn't. And another beautiful thing about the USDA home loan benefit is that it allows 100% financing. So zero money down on this one, and you don't have to be a former service member of the military to qualify. So that's a massive benefit. No? And it's a 30-year fixed type program as well. It has so there's also like a type of mortgage insurance that's built into like similar to how FHA, no matter how much equity you have in the home, you still have to pay some mortgage insurance. Well, in USDA, it's very similar, but typically the guarantee, like that cost of that insurance, which they call a guarantee, but whatever, the cost of that insurance is less typically than what you'd see on an FHA loan. So that's it's a very attractive program. Would love to help folks take advantage of this program, which is probably one of like the dark horse loan program in Puerto Rico that a lot of people don't know that they can get. Usually because clients are, if you're an agent, folks are looking in these areas here, like metro area, Rincon. But if it's anywhere in between, like I think even Dorado too is kind of on that out, not really a possibility. But then there's also some other important eligibility requirements, right? So it has to be your primary home, can't be an investment property. FICO minimums down to 640. There is a limit to the income of the household. So the USDA wants to know that they're trying to help folks that have have a lower income. And so the maximum income limit that the USDA will allow is for between a family of 1 to 4 people is $103,500. So that means if you're a sole individual who makes more than that, sorry, you can't use the USDA home loan benefit. We've got other programs for you. And all the way up to 4 people. So if there's 4 people living in the home above the age of 18 and they're all earning an income, if you add up their full incomes all together, it has to be less than $103,500, or we have to find another loan program if they're making more than that, right? So it's really, this program is designed to help folks in rural areas, like low population density, and folks that don't have like these a very robust income. And then also, if the household has between 5 and 8 people, then the total income of the family can't be more than $136,600. So something maybe you knew about this loan program, but it's a really solid one, and we really like helping folks take advantage of it here on the island as well. Okay, no, look at that crazy ice cream. So now is a whole bunch of other different kinds of of loan programs that are called non-QM, which means non-qualified mortgage. In brief, I won't try to go into too many of the boring details, but basically conventional loans, banks or lenders take conventional loans after they lend the money, they bundle them up in mortgage-backed securities, they're called, and then they sell them to Fannie Mae and Freddie Mac, which are these government institutions. They get the money back from the government and then they re-lend the money. They can only do that if it's a conventional loan, if it's what's called a qualified mortgage. And so they can bundle them and sell them in there because they're safer loans. So these are loans for folks that may not have a good enough qualifying income. Like they may not have your typical type of salary. They may not have, enough of an hourly wage. Maybe they're an investor and they make, they basically have a huge asset. There's lots of different scenarios. So let's take a look here. But this is for folks that might not have your typical type of income, that vanilla type loan that we started with. And if there's a type of loan program that we at CoLab probably specialize in, as far as in helping people buy homes in Puerto Rico or properties in general, or do refis, it's non-QM. We do a lot of these and help a lot of folks with it. And it's especially good if you're self-employed. So if you're an agent, you have a self-employed client, tell them to give us a call and to think about, we can walk through these different strategies with them. So first kind is jumbo. So that's more than anything that's jumbo is just more than that conventional loan limit, which the new one is, oh man, if I could see you guys, I would call on somebody's name right now if I could see you, but don't worry, I won't call anybody. But that loan limit of $726,200, right? And then so we can go up to a loan amount of $3 million. So let's say obviously the purchase price can be higher than $3 million, but that we can go up to a loan amount of $3 million with a jumbo. So one of the most popular programs that we help folks with is, especially people that are self-employed, is the bank statement loan program, right? And this is ideal for people who are, first of all, self-employed, got to be self-employed for 2 years. These are typically folks that are self-employed. They might pay themselves a small W-2 salary, right? Maybe they're only paying themselves a W-2 salary of like $30,000 a year. But then they're receiving lots of deposits from their company that they're then writing off. And so $30,000 is not going to be enough to qualify for much of a loan in many circumstances. And so we can use the depository income on their bank statements. If they have 12 bank statements or 24 bank statements, so 2 years of statements in a row, we can use those and we analyze them and figure out what's the average amount of money being deposited. And we find out how much is the average per month, and that's their qualifying income for these loans. So it's a fantastic program. But like I said, they do have to be self-employed for 2 years minimum. And they would just send us their bank statements. There's a couple of little details there, but if you have a client or if you yourself might be interested in that, I'm happy to have an in-depth conversation about it. So here we go. Also too, that it does not require any tax returns. So as a matter of fact, if I submit, let's say that you're an agent, you have a client trying to get qualified for the bank statement loan program, and if we send their planillas, if we send in their tax returns and their bank statements, we've just disqualified. Like, we do not need any tax returns for the bank statement loan program, and if we do use them, we've just accidentally disqualified. So that's another massive benefit for folks that are self-employed looking for a loan to buy a house or investment property or second, or a refinance. So another program is called asset utilization. This is for people who, maybe they don't have a typical income. Maybe they're a crypto investor, maybe they are just like, a day trader or whatever, but they don't have like a typical income where they're like working a 9-to-5 job, but they have a large amount of assets or one large asset, and they just maybe sell little pieces of it and live on that. There's a loan program just for those kinds of folks, right? So we can use crypto assets, though this gets very tricky because the hardest part with crypto assets is being able to, for the client or the borrower to generate a statement that shows what their asset is worth. And if you dealt with crypto stuff, you might be aware it's just not many platforms, the ones that are left, it's not easy to generate these statements. So that can be a challenge, but there are specific platforms that we've seen can generate useful statements, and we can get people. But anyway, if it's not crypto, that's all right. There's plenty of other kinds of assets that are accepted. Up next is another very popular program called DSCR, which stands for Debt Service Coverage Ratio. There will be a quiz at the end. Well, that's not true. I'm not going to quiz you, don't worry. But anyway, all you need to know about DSCR is basically if the property cash flows greater than the mortgage payment, you got a loan. There's a little bit more to it. Basically, it cannot be somebody's primary home. It has to be an investment property, purely investment property. The borrower does not need to have any income at all. Like, they don't actually have to have a job, and that's okay. They can, because the idea here is that your qualifying income is the rental property income, right? And so that's a very big positive there. The borrower, though, they do need to have their own funds that they can contribute to the down payment, right? So we cannot use gifted funds. So if it's like, some parents trying to help their kid buy an investment property, that's cool, but this might not be the program for them because the actual borrower has to be able to use their own funds. I'm gonna jump over here to what is in light blue. For all of these non-QM programs, it has these same two requirements. One is 30% down payment. That's right, 30%. I'll explain in a sec. And 2 appraisals, right? 30% and 2 appraisals. Why? I get a lot of questions. Why 30% down and why 2 appraisals? That seems over the top. The answer is because these loan programs are brand new to the island. Like, this is not something that's ever been offered to my knowledge, right? If I'm wrong, drop me a comment. But these are brand new things, not ever been offered. And they're offered by a group of investors that are essentially quite aggressive in the mortgage lending space. But so they're doing an aggressive thing by offering these now in Puerto Rico, but they're doing an aggressive thing carefully, if that makes sense. So they want to make sure that if they're not asking folks, for example, DSCR, it doesn't matter. You don't have to have a job. You just need to have owned, for that specific loan program, you just need to have owned some property in the last 24 months. Like, your name just needs to be on a deed, and that's it, right? And then you have to have the 30% of a down payment to qualify. That's all you need. And so, since they're not asking lots of questions about income, they're not asking about tax returns, they're not asking about jobs and stuff like that, this group of investors, that's why they have these requirements just for these 2 programs, right? Obviously, for conventional, FHA, VA, USDA, this does not apply. But for these specific non-QM loans, which are really, really helpful for lots of people, it does require 30% down, 2 appraisals, okay? So something important to note there. Also, for any of these, you can purchase in an LLC, right? Which is, we get a lot of folks looking to invest and investors that want to buy property and they want to do so in their LLC. That can be done with all of these loan programs right here that we're talking about. And lastly, hard money, right? So that's the best I could do, guys, for hard money ice cream. I don't know. I found an ice cream sculpture. This looks pretty hard. But in brief, hard money, not much to it if you're familiar. But if not, basically, it really is case by case. We have various hard money lender providers here in Puerto Rico, and they all kind of seem to specialize in slightly different niches, little areas where they would do hard money. And so let us talk to them if you like, and it really kind of depends on the specific circumstances that the client or the borrower is looking at. Hard money is great because it's fast, right? So it's essentially like it's very quick. Typically fewer questions, fewer documents that you need to get qualified, but it can be anyway. But the interest is going to be a little higher, right? Because it's a riskier type loan. Again, as they're not asking questions, that many questions, they roll that risk into the rates, and they are shorter term. So like max hard money is going to be 2 years, and lots of creative type solutions for folks. So maybe if somebody's looking to get in really fast, they see an opportunity and they don't have time to wait for a really long process, but they don't have all the cash themselves, they could jump in with a little hard money option. So if you have a client that might be in that situation, or you yourself might be, looking for hard money, give me a call, give us a call, and we'll be happy with that. So, folks, those are all the main types of loan programs that we have on offer here in Puerto Rico. Our job at Collab Lending, we are trying to dispel and get rid of lots of myths, and basically we want to make lending in Puerto Rico as transparent and seamless as it possibly can be. Just as transparent and seamless as it should be in other states, if not more so. So that is like our whole goal and our whole ethic as a company. And I want to just thank Andre Munar and Megan Marsh, our two co-founders, and for thinking and outside the box. Really, Andre decided to come down here and offer these loan programs and get our company set up to help make financing not a bad word in Puerto Rico anymore, because a lot of buyers will be like cash only, whoa, not subject to appraisal, whoa, and that's because they've been dragged through. Too many people have been dragged through really long loan processes to not close, and so we're trying to fix that. And so anything that we can do to help you with that, please give us a call. Here, a quick plug for another event. If you're a real estate professional, so if you're an agent, if you are a insurance broker, if you're even appraisers, if you're an appraiser, we'll allow you in too. But in all seriousness, we're having this event next Tuesday evening at our office in San Juan, in Santurce over there, from 6 to 7:30. More mimosas and mortgages. It's going to be awesome. But space is limited, so do go ahead and register. Here's a QR code, or you can send me a message and I'll send you the link. But anyway, folks, thank you so much. I really appreciate. Seeing a lot of familiar names in the attendee group here. So thank you all so much. If you need my contact information, it's here on the screen, or if you're looking at it, you can scan that QR code. I'll be real happy to reach out to you. Okay, good question. How long does it take to get pre-approved? We can do it the same day. Typically, it takes about 24 hours, because usually we do pre-approvals. So not just a pre-qualification. We want to see the documentation that shows, especially if you're an agent, this is a good thing to know, because at Collab, we look, I want to see bank statements, I want to see tax returns, we want to see, depending on the loan program, obviously, but we look in depth at the documentation for the client and the borrower to make sure that when we say that they're pre-approved and we send you that letter, if you're an agent, we send you a client and say, hey, this person's pre-approved, we have the highest possible confidence that they can get to the closing table. And we can pre-approve somebody as fast as they can give us those documents, right? So, we do it same day in certain circumstances. So if you have a client, they're standing in front of they're here in Puerto Rico and they're standing in front of a property that they love, they want to make an offer right then, cool, tell them to call me. We'll do our best to try to hurry up. We work nights, we work weekends, we work holidays. So hopefully we can collaborate with you if you're an agent, or if you are a borrower and you want to know what you can get qualified for, give us a call, give me a call. Thank you, Annette. I see your comment there. Really appreciate that. Where can your clients apply? Basically, have them send me an email right here. That's one place that they can apply. If you just send me an email, I can respond with the link. Or if you scan this QR code, you'll have access to all my contact info. And I'm if it's text, if it's a phone call, if it's an email, we're available. Here's a question here. DSCR, does that apply for commercial properties? So depends on what makes it commercial. If it's commercial because it's like 5 residential units, then yes, but that would need we would need to get an exception to go beyond the typical 4 units. But if it's commercial, a huge type hotel or something like that, no, unfortunately, it's not gonna. This is mostly for residential type properties, though we can, if it's close to being residential, maybe it's just got like a little extra unit, or maybe there's like a business on the first floor and then there's a residence on the top floor. We can get exceptions for those kinds of things. But thank you for that question, Jose. All right, thank you, Raul. Appreciate you coming out. And Annette, I see your comment here about the FHA condo list. I will send that to you. Let me make a note of it. And minimum loan amount, solid question. Thank you. Yeah, minimum loan amount is typically $75,000. That can be flexible depending on circumstances. But right now our minimum loan amount is about $75,000. But if you have, if you're looking for something that's maybe less than that, let's talk, because everything's negotiable. You never know unless we ask. So, but folks, thank you all so much. I'll sit tight here until I see that there's not anybody around. And but really appreciate your attendance. Thank you very much. Give me a call if you're an agent or looking to be a borrower. Really happy to help address people's specific situations. So thank you all very much for coming. Oh, another good question here. Getting one asking if we lock rates. We do. So as soon as we will lock your interest rate as soon as we have a purchase agreement from you, right? So other lenders on the island, you got to be careful because they will float your rate. They'll get you in the door. They'll be like, look, we have 5% right now. Come on, 5%. And then you are in process, the client or the borrower is in process thinking that they're going to get a 5% interest rate. Then 2 weeks before closing, then the lender locks the rate and the rate has jumped up. And oh, yeah, sorry, it was 5, but now 2 weeks before closing, now it's higher. Sorry. And so then the client the borrower has to decide, do I take the higher rate or do I walk away and maybe leave my deposit, lose it, or leave an appraisal that I paid for, leave title work that I paid for. So people get into a difficult situation. But at CoLab, we lock your rate for 60 days. In Puerto Rico, we lock your rate for 60 days from the day that you give us that purchase agreement, the signed contract. We lock the rate from then until we close. Excellent question. Thank you. All right. Thank you, Mark. Appreciate you being there. Thank you, everybody. I'll sit tight until I don't see anybody around. Give me a call too. I mean, not at this moment. I might not answer, but thank you guys. I will answer afterwards. So I'm going to go ahead and close this off here. Thanks everybody again. Have an awesome day and hope to hear from you soon. Stay, John.